Welcome to our discussion on fundamental and technical analysis in Forex trading. Understanding these two approaches is essential for any trader looking to navigate the currency markets effectively. Fundamental analysis involves examining the macroeconomic landscape, social and political forces, and their impact on currency movements. In addition to reviewing key economic indicators that might offer insights into the health of an economy, market risk sentiment is a significant driver of currencies. For instance, the USA's decision to impose tariffs on Chinese goods heightened geopolitical tensions, potentially causing investors to be more cautious. Consequently, they might seek safe haven investments like gold and the US dollar during uncertain times, which could drive the value of these assets higher. This exemplifies how supply and demand ultimately determine prices, or in this case, currency exchange rates. What should you look for when analyzing factors that might affect the supply and demand of currency pairs? Here is a list of relevant items. Economic indicators can provide an overview of the economic health of a particular country. Traders usually keep an eye on these commonly used indicators. There are Consumer Price Index, CPI, Gross Domestic Product, GDP, unemployment rate, interest rates. Economic indicators can provide an overview of the economic health of a particular country. Traders usually keep an eye on these commonly used indicators: Consumer Price Index, CPI, Gross Domestic Product, GDP, unemployment rate, interest rates. Consumer Price Index, CPI, it measures the price changes in the economy. Generally speaking, a higher CPI number is beneficial for the currency and vice versa. Gross Domestic Product, GDP. It represents the total market value of all goods and services produced in a country during a given year. Generally speaking, an improvement in GDP numbers benefits the currency, and the inverse is also true. Unemployment rate. One of the most significant unemployment rate data is the U.S. non-farm payroll numbers, released on the first Friday of every month. This gives an overall view of the labor market in the U.S., which is currently the world's largest economy. A low unemployment rate represents a healthy economy, while a high unemployment rate could see a need for intervention by central banks. This brings us on to the next point on interest rates and inflation. Interest rates. The biggest factor influencing the forex market is interest rate changes made by any of the 8 global central banks. If there is an unexpected rate hike, an increase in interest rates, the currency will move higher. Conversely, if there is an unexpected rate cut, a decrease in interest rates, this could lead to traders selling the currency and buying currencies with higher interest rates. Hence, it's important to keep a close watch on the economic calendar for the different central banks' interest rate decisions. Market sentiment reflects investors' confidence towards the economy and market outlook. There are 3 categories when we talk about market sentiment: bullish, risk-on; bearish, risk-off; or neutral. But how are these categories applicable to our trading? In a risk-on environment, we want to buy high beta currencies such as AUD, NZD, CAD, EUR, or GBP, and sell safe haven currencies such as USD, JPY, and CHF. Conversely, in a risk-off environment, we want to sell high beta currencies and buy safe haven currencies instead. So, how do we determine market risk sentiment? Here are the 4 key indicators to look at: VIX, Dollar Index, US 10-year Treasury Yield, S&P 500, Dow Jones Industrial Average, DJIA, and Nasdaq Composite. VIX, also known as the Fear Index, measures market volatility. A rising VIX indicates that investors are becoming more risk-averse and pessimistic about the market outlook. Consequently, they tend to invest in safe haven assets such as JPY, USD, CHF, and gold, driving their prices higher. Conversely, a decreasing VIX suggests that investors are more optimistic about the market outlook, which can boost the value of currencies like AUD, NZD, CAD, EUR, and GBP. Dollar Index. It measures the value of the US dollar against a basket of major currencies, representing the most significant trading partners of the US. Generally, the dollar index rises in a risk-off environment and falls in a risk-on environment. US 10-year Treasury. Yield. This is a reflection of investors' confidence. Generally speaking, treasury yields move higher in a risk-on environment and push lower in a risk-off environment. This is because treasury bills, notes and bonds are fully backed by the US government, thus they are perceived to be one of the most secure investments. So when investors are more risk-loving, demand for these safe haven assets decrease, thereby pushing prices lower and yields higher. S&P 500, Dow Jones Industrial Average, DJIA and Nasdaq Composite. These are US stock market indices, which is also a measure of the global economic health. So how do we interpret them? When the stock indexes are rising, it signals a risk-on environment, while a declining stock index signals risk-off market sentiment. Technical analysis is a common form of analysis in trading that is used to read and attempt to forecast the markets. It is essentially price forecasting through recognizing repetitive shapes and patterns within historical price structures in charts, then determining the most viable time to enter and exit a trade. It follows the theory that historical price movements repeat themselves and that all current market information is reflected in prices. In a nutshell, it is applying different studies, things like trend lines, moving averages, indicators, etc., onto the chart and trying to understand what might happen next. Technical analysis cannot accurately predict future price movement all the time. It is definitely not a crystal ball through which you can tell the future. Instead, you should try to see it as a guide that can help anticipate what is likely to happen to prices over time. When using technical analysis to trade, always think in terms of probabilities. From there, you can make more well-informed decisions about where and when you want to place your trades. However, it's important to note that technical analysis tends to work well when these three key points remain valid. High liquidity. For technical analysis to be accurate, the asset must have reasonable liquidity, i.e., trading volume. This is because assets that are traded heavily are more resistant to manipulation by other investors, reducing the risk of dramatic price changes. On the other hand, thinly traded assets can be more easily manipulated by investors, which would affect the accuracy of technical analysis. Thankfully, the Forex market is one of the most liquid markets in the world, which is one of the reasons technical analysis tends to work well on it. No extreme news. Technical analysis tends not to work well when there are high volatility news events that can swing the markets wildly. This is because these news events tend to be driven by strong emotions and panic, less noise. When you are on the lower time frames, e.g. 1-minute or 5-minute charts, there tends to be a lot more noise. Any news event can cause prices to jump off your screen, so to avoid such situations, one can go to the higher time frames, such as 1 hour, 4 hour, and even 1-day charts, where even bigger news events wouldn't cause prices to move too wildly. What to look out for in technical analysis. Technical analysis is one of the most widely used types of analysis in Forex trading. However, it may be confusing for new traders to pick and choose when there are so many different technical analysis tools available. So, when you're starting to use technical analysis, there are three main points to look out for. First, the overall trend. Always remember this saying, the trend is your friend. Think of this as the big picture of the movement of a currency. There are three types of trends: uptrends, downtrends, or sideways. Uptrends are defined as a series of higher lows and higher highs. These rises should be obvious when viewed on a chart. Downtrends are defined as a series of lower highs and lower lows. Similarly, we can easily see that prices are pushing lower. Sideways trends, also known as ranging, are a series of highs and lows within a relatively flat or compressed range. These usually happen when there isn't a clear direction in the market. Once you know the trend, it helps to trade in the direction of it, as its momentum would naturally help you. So, in an uptrend, it tends to be better to look to buy on weakness or dips. The same way in a downtrend, it tends to be better to look to sell on strength. This sounds a lot easier than it really is though, but don't worry, we'll be going into the art of technical analysis in our upcoming videos. Second, the strong areas of support or resistance. If a price level held at key support or resistance levels in the past, it's useful to keep an eye out for it and base your trades around that historical price level. This is because the very concept of technical analysis is that prices tend to respect patterns, and if prices tend to bounce nicely at a previous level in the past, there's a higher chance that it might do the same when history repeats itself. Of course, this is an oversimplification, and we'll look into how to identify these support and resistance levels in more detail in our next videos. Third, the indicators. One of the most popular sets of tools used for technical analysis is indicators. There are oscillators, such as the stochastic, RSI, and MACD, and there are moving averages. These are studies you load onto your chart to help you better interpret the market. It's a great way to analyze the market, so we'll dive deeper into ways we can use various indicators to forecast the markets in our upcoming videos. Thank you for watching our video. If you found this content helpful, please give us a thumbs up and subscribe for more insights. We'd love to hear your thoughts, so drop a comment below with your feedback or any questions you might have. Don't forget to hit the notification bell to stay updated on our latest uploads.